All right, today we're putting on our consultant hats to give you a sharp, investor-focused briefing on the 2026 union budget. We're going to cut through all the political noise and analyze this thing for what it really is, a strategic blueprint with some very real, very immediate consequences for the market and for your portfolio.
Okay, so here's how we're going to break it all down for you. We'll start with the big picture vision, the why behind it all. Then we'll dive right into the hard numbers. After that, we'll track the money to see where the government is placing its biggest bets, then look at how the market reacted literally in real time, and finally, we'll wrap it all up with the investor's bottom line. What does this actually mean for you? First up, the grand strategy. See, before we can make sense of any of the numbers, you've got to understand the destination on the map. And for this government, that destination has a name: Viksit Bharat.
The finance minister's opening words here really set the tone. The message to investors was crystal clear. This is all about continuity. It's a promise to stick with the program of structural reforms. This isn't about short-term handouts. It's about building on a high-growth foundation with decisive and sometimes, tough actions.
And that's the crucial point, right? This budget isn't just a one-year plan. No, it's a single piece in a much, much larger economic puzzle. Every single policy, every allocation, it's all designed to be another stepping stone towards that 2047 goal. You can think of it as the North Star for all economic policy right now.
So this big vision is guided by these three core kartavyas, or duties. Just think of them as the why behind all the spending. First, boost productivity and growth. Second, empower people to actually participate in that growth. And third, make sure the benefits are spread as widely as possible.
Okay, so that's the vision, but talk is cheap, right? Let's get into the headline numbers and see how this strategy is actually being backed up with cold, hard cash. For investors, this is where the spreadsheet meets the story.
This number right here, this is the big one. It's a record amount for capital expenditure, or CAPEX. Basically, the government is spending a massive amount of money to build things: roads, railways, ports. The strategy is to do the heavy lifting now, which makes it way easier and more attractive for private companies to come in and invest right alongside them. Now, this is the projected fiscal deficit as a share of the economy. And while the spending is high, this number sends a really important signal. By nudging it down from 4.4%, the government is telling global investors and rating agencies, hey, we're serious about keeping our financial house in order. It's all about building trust.
And this is the grand total. The whole shebang. It's the overall size of the budget for the year, and it shows a very clear commitment to keep spending and keep those economic engines firing on all cylinders. Now, what's really fascinating when you look at this table is the trend. Just look at that capital expenditure line. It's not just some one-off jump. It is a sustained year-over-year increase. That kind of consistency is exactly what long-term investors are looking for. It shows a real commitment to structural growth. So we know the total spending is absolutely massive, but the big question is, where exactly is the government placing its bets? Let's drill down and see which specific sectors are being primed to really drive India's growth story forward. The whole strategy is really built on these 6 core pillars, and it's a pretty smart multi-pronged approach. It's not just about, shiny new tech sectors. It's also about strengthening small businesses, modernizing old school industries, and of course, building out the infrastructure needed to connect it all together. And this slide? Oh, this perfectly illustrates the new reality for investors. As the budget speech is happening live, analysts are literally feeding the text through algorithms to pick out key sectors and instantly predict how the market will react. That gap between a policy announcement and market analysis, it's basically shrunk to zero. So here are some of the government's biggest bets, and they translate directly into opportunities in capital goods, logistics, and tech. We're talking a massive push into high-tech manufacturing, aiming to rely less on imported electronics, a huge infrastructure boost with new rail corridors, a super strategic focus on rare earth minerals, which are vital for future tech, and, critically, direct support for small and medium businesses, making sure they get funding and, maybe more importantly, making sure they actually get paid on time.
So the government laid out this grand, long-term plan for the country. But the market lives in the here and now, doesn't it? So how did the ultimate judge and jury for investors react on Budget Day? Well, while the big picture was all about that long-term growth, it came down to 2 specific little details that hit the trading community right where it hurts. First, the cost of trading commodity futures just went up. And second, share buybacks, a really popular tax-friendly way for companies to return money to shareholders, suddenly became a lot less attractive. You can almost feel the mood on Wall Street shift. What had been a pretty optimistic morning turned sour as these final announcements were processed. The government's long-term vision had just collided head-on with the reality of short-term trading costs.
And bam, this was the result. The BSE Sensex absolutely crashed, wiping out all of its earlier gains. And get this wasn't a reaction to the infrastructure plan or the manufacturing vision. No, this was a direct, knee-jerk response from traders to the increased cost of doing business in the market, plain and simple. Okay, let's move to the final analysis. It's time to distill all of this down to the most crucial takeaway. After all the dust has settled, what does this budget really mean for your investment strategy?
It's really a tale of two budgets, isn't it? For the long-term patient investor, the story is incredibly positive. You've got a massive infrastructure push, a huge focus on domestic manufacturing, and that all-important fiscal discipline. But for the short-term trader, the budget introduced immediate pain points, higher transaction taxes, new rules on buybacks, and just an overall negative market vibe. And this quote from a market strategist just hits the nail on the head. It perfectly captures that tension. On the macro level, the big picture, the budget delivered exactly what the market wanted, a fiscally responsible plan focused on growth. But on the micro level, those little details about market taxes were enough to spook traders and trigger a big sell-off. And that leaves us with the big, forward-looking question for every single investor out there. The government is betting big that this long-term, investment-heavy strategy can effectively shield the Indian economy from whatever the world throws at it. So the question is, will this massive domestic push be enough to navigate all the global uncertainty and actually deliver on that 2047 promise? Well, that is the multi-trillion-dollar question, isn't it?